Happy Friday, traders. Well, it's been an interesting week in markets. There's been a few things going on, a few things moving markets. So let's go through those. The first thing that is moving markets is the hot economic data that we got out of the US this week. So we saw the monthly inflation numbers. We saw CPI pushing up to 3.8%, going towards 4%. No doubt it's going to be over 4% next month, but it was a hot CPI number. The next day we saw PPI, Producer Price Index, another hot number, well above expectations. That went from 4% up to a whopping 6%. Generally, when producers have to pay more for their inputs, that eventually will get passed on to the consumer and higher CPI as well. So we saw some really hot data coming out of the US. What effect has that had on markets? Well, the more meaningful market that it really has impacted has been the bond market. So US 2-year yields have finally pushed up and printed above 4%. US 10-year yields also on the rise and up at 4.5%. So look, these levels are huge levels, are big levels. Not only are they psychological levels, they're technical levels, and potentially, breaking above these levels, we can see momentum higher in these yields. It's something that the market really needs to watch closely. And both those US 2 years, 10-year yields now are up over 50 basis points from where they were pre-war. So look, these are big moves, they're significant moves. And obviously the market is starting to think that potentially the Fed has got to hike rates at some stage as its next move. I'd even go as far as to say probably the September meeting you may see a Fed rate hike. So bond yields higher. The market that impacts, and it has impacted, has been the currency market, US dollar. So US dollar follows yields, so higher yields, you get a stronger US dollar. So if you're wondering why the US dollar has performed so well in the last 24 hours plus, it's because of those higher bond yields. Another market that obviously, and dollar index at the moment is pushing up towards 99. Dollar index has been in a range trade for about a year. We haven't had a directional break in the dollar index for the US dollar. It's been range trading from 96 up to 100. So we're pushing back up towards the top end of the range again. But in any case, selling US dollars at the moment, it's not going to work with bond yields higher. The other market that obviously does not like high yields and does not like a high US dollar is gold. So yes, we did see gold lower overnight, and it has been weighed at top side for some time because of exactly what is happening. So I would not be surprised, if we do see this gold move continue lower and potentially see a decent clean out again, because gold yields nothing. It does not like these high yields. Next month as well, we're going to see probably a lot of rate hikes from central banks, Bank of Japan, ECB, maybe BOE, BOC. Again, not good for gold. Anyway, so higher bond yields, higher US dollar, weighing on precious metals. So that's been one of the significant, meaningful moves that's been happening in markets this week. The other one is the AI trade. What an absolute beast. Nvidia is, in the last 7 days, is up 20%. Phenomenal. It's pushing now up towards a $6 trillion market cap. Phenomenal. If you have a look at the market cap of the ASX, it's about 3 million Aussie. So Nvidia market cap is pushing up towards 8 trillion, 9 trillion Aussie, almost bigger than one company, bigger than every single company in the ASX, times that by almost 3. Just to put it into perspective, just the sort of numbers, because these numbers are just mind-boggling. So we have seen with this AI euphoria, NASDAQ, S&P, just one-way trains, making new record highs on a daily basis. vertical. And not only that, is that US equities, NASDAQ, S&P have ignored what is going on with bond yields and the stronger USD, which generally should weigh down on equities. So again, phenomenal performance. What's going on with this AI euphoria? How long does it last? It's a very good question. Very hard to predict. When markets go vertical and you have this sort of euphoria, timing exactly when, where is the top, is something that is super hard to do. But one thing is certain, there's not one market that goes vertical that does not end badly. So at some stage, there will be a significant pullback in these markets. Again, it's just a question of when, is just super hard. Crude oil, obviously, is a big focus for the market. It's causing a lot of issues. The issue of the higher inflation, etc., comes from crude. It's been pretty quiet in the last few days, obviously. We haven't seen a lot of headlines coming from the Iran-US conflict because Trump has been in China. But look, it's been sitting above $100. Not good. We do have a weekend coming up. We have gap risk. We've seen a lot of gap risk with crude every single weekend, so you've got to be careful, long or short. But there are rumors that when Trump comes back from China, that potentially he may start bombing Iran again because he's very super frustrated that they are not coming to the table seriously to make any sort of deal that he wants. So look, that is a huge, huge risk. Again, if something happened over the weekend, that gap risk is going to come into play. You need to be super careful on that. Anyway, again, look, a lot going on. We have volatile markets. It's not going away anytime soon. Good luck with your trades. Have a fantastic weekend. We'll check back in with you next week.